Joining us now to preview how tax will feature in the upcoming 2014 budget is Kyle Mandy, Head of National Tax Technical at PwC. Kyle, thank you so much for making the time to join us. No doubt, Pravin Gordhan's job tomorrow is going to be a very difficult one, a balancing act that he has to get exceptionally right. If he were to raise taxes, assuming that that's an option that he chooses to exercise, talk us through the options that he has at his disposal.
Well, he has very few options actually, so we don't expect that he will raise taxes. But if he was going to do so, the only taxes that he could really raise, aside from the obvious ones like the sin taxes, etc., which come about every year, are on the personal income taxes themselves.
Kyle, looking at, I often wonder why they don't raise VAT. It's 14%, been 14% for a long time. 1% on everything, you'd think wouldn't really be noticed, although for the fiscus it would bring in a lot of money.
It would bring in a lot of money. Look, I think many tax advisors have been saying for years that the VAT rate is too low and it needs to be raised. It's a political hot potato. We know that COSATU is absolutely opposed to it. So the chances of that happening this year are almost zero, if you like. Certainly we hold the view that there should be a shift away from the corporate taxes, which is towards VAT, which would enable growth to happen in this country.
What about a wealth tax? Would that strike the right chord in terms of the symbolism, especially in light of it being an election year, targeting the super rich as against the ordinary South African consumers? And
also, just to add to that question, is the tone of the State of the Nation address. We're pushing transformation. They've got their eye on Julius Malema. They're not sure how much support he's going to get. So let's make a nice big symbolic statement and hit the rich.
Well, it would certainly be a populist move, wouldn't it? Whether or not it would be the right move is another matter altogether. So I certainly don't think it would be. It would send the wrong message, and potentially it would drive the high net worth individuals out of this country, and we've seen that already.
Except if I could follow up with that one, Britain at the moment, there's a lot of resentment to bankers and bonuses and all that kind of thing. I mean, this kind of resentment of the rich is not confined to South Africa, and there's a lot of pressure on the British tax authorities to increase taxes on the top level.
Well, they certainly did. A couple of years ago, they did increase those taxes, but they're starting to slowly bring them back down again. So it was a temporary thing, given the global financial crisis and the perception of what wealthy individuals, particularly wealthy bankers, played in that crisis.
Kyle, if you was to take the decision not to exercise raising any of the taxes and perhaps look at cutting back on spending, where can you do that? We saw a little bit come through in the midterm budget with government, but still very peripheral, just looking at the frills, not necessarily core spending.
Well, that's not going to save vast amounts of money, but it certainly sends the right message, and I think that's the important first step that needs to be taken. So the Minister did take some steps in the mini-budget, and hopefully he'll take more steps. He did promise that there would be more steps in this budget now, so let's hope that is the case. But the only real place to start trimming is on the big ticket items like wages and social expenditure.
What room is there still for SARS to increase efficiencies? Because that's probably one of the best, if not the best, tax authority in the world in terms of its policies. I mean, I might not agree with all of them, but certainly they're consistent. There's not much room left, is there? They've squeezed certain areas dry, and maybe there's a few high net worth individuals they're after, but there's not much more room, is there?
Well, there isn't. Look, SARS has done a wonderful job over the last 10 years or so, and we have to give credit where credit is due in that respect. But yeah, their focus has been largely on big corporates, and yes, they're quite correct. They've pretty much squeezed them dry, and there's very little still to be gained from that. There are the odd sort of anti-avoidance things taking place, but the other avenues open are, as you mentioned, are high net worth individuals, and those are certainly in their focus.
Let's look at the tax base and the direction in which that's going. Are we making the right inroads in terms of increasing that tax base and with the right types of individuals?
Well, I think the important thing is we've got to broaden our tax base. I mean, we've got a very narrow tax base, particularly when it comes to personal income taxes. We've got very few taxpayers paying the vast bulk of those taxes. Government is very quick to say that everyone pays tax, and they're quite correct in doing that. But it's the question of the terms of the quantum that they that they generate for the economy as well.
Kyle, thank you so much for joining us this morning. Thanks to Kyle Mandy, Head of National Tax Technical at PwC.